Dude, let's get into that deglobalization. How does that, benefit Bitcoin?
Yeah, I just think let's take the situation with Russia and the U.S. because I think
Yeah.
this was arguably one of the kind of biggest watershed moments, or maybe aha moments for different sovereign wealth funds around the world. Maybe thinking about how they want to strategically position their country's reserves. If we go back to the beginning of 2022, the U.S. if effectively just froze Russia's FX reserves and basically pulled out kind of the nuclear bazooka of what they could possibly do in terms of dealing with that aspect of Russia and sanctions. So I think that was kind of a big aha moment, or maybe wake up moment for a lot of these countries of, okay, if we can have our assets frozen by the U.S. at any moment without any due process, what do we want to own? I would argue that Bitcoin, even over gold, is for the reasons that I described why it's superior to gold, is something that these countries are probably heavily considering. Bitcoin's still pretty small. It's maybe not super liquid that they can get a meaningful allocation to. But I mean, I would argue there's a pretty good case for, taking a couple basis points of a sovereign wealth fund's portfolio and saying, why don't we allocate to Bitcoin as this thing that, isn't able to be seized or is, completely decentralized and isn't controlled by any single entity.
Mm-hmm. So you mentioned the verifiable scarcity earlier. And one of the things that, of course, is coming that kind of lends to that scarcity is the halving, right? It's, there is this limited supply, and built into the white paper and all the calculations is that, hey, a halving is going to happen regularly, and that's going to make mining less profitable. Maybe we can go ahead and put from the web. This is the live Bitcoin halving countdown, just so people can see what this looks like. This is from watcher.guru. There's a ton of things that you can just find on Google. Will said, hey, just type in halving tracker, and this is one that came up. So 8 days, 21 hours, 27 minutes, 32 seconds. What happens? I mean, is someone pressing a button and things start blowing up, confetti comes up, fireworks? What happens when this halving comes to take place?
Yeah, so basically, like Michael Saylor comes out of the ceiling in a disco ball.
Does it go on that boat in this background?
Yeah, that's right. That's right. So basically, the halving is when the supply issuance gets cut in half. So right now, there's roughly 900 Bitcoin that are issued into circulation every day. After the halving in roughly 10 days, as you just mentioned, going down to the second there, which is awesome. It's like the New Year's Eve countdown for the Bitcoin guys.
Yeah, it's like,
that'll get cut in half to 450 Bitcoin. So, over time, what happens is that Bitcoin's issuance programmatically continues to go down roughly every 4 years. It's based on block times, or I'm sorry, the block heights, the number of blocks in between the halvings, but blocks come out roughly every 10 minutes. So that's where we refer to, basically this 4-year period between them. And so basically what happens is the stock to flow ratio of the amount of circulating supply relative to issuance continues to go up. So, if you measure the stock to flow, I don't know exactly what it is off the top of my head, of Bitcoin relative to something like gold, after this halving, Bitcoin will be provably, quantifiably more scarce than gold for the first time ever.
wow.
There's a lot of talk of, does this basically mean that you're going to have kind of this like supply shock on the market?
Mm-hmm.
I think this was the case early on in like the 2012 or the 2016 halving, where the halvings like literally had an impact on the actual price because such a large impact relative to the amount of supply and circulation. I don't think that this current halving is that impactful from a pure supply demand standpoint. But that being said, okay.
No, just real quick, because I mean that is the supply side, but you also have, not too far from this event, the institutional kind of, okay, ETFs are now available. The demand side, and I mean, just from high school economics, I'm no economics major, but when you've got a lot of potential demand there and a limited supply event, is that what's getting people so excited about this, and is it justified?
Yeah, 100%. Look, I think the story is much more about the demand side than the supply side. And you are correct, right? Is, again, the supply issuance does come down. So technically, based on basic economics, since the supply issuance is coming down, you have more demand. the halving definitely doesn't hurt the case for investing in Bitcoin. I'm just saying I don't think that's as big of a driver as maybe it has been in the past, or people like to kind of make it out to be. But nonetheless, I do think it's kind of a good meme, or it's kind of a good talking point for institutions to grab onto, that Bitcoin is quantifiably more scarce than gold. I do completely agree with you, though, that the picture is much more about the demand side and kind of, what we just talked about, the ETF, unlocking massive pools of capital to potentially allocate to this thing for the first time ever.
Mm-hmm.
Yeah, and there's a certain behavior also with Bitcoin, right? When around the halving, even before it can run, and then what does it do after this actually happens?
Yeah, so typically we start to see Bitcoin really rally after the halving. This
Okay.
kind of cycle, if you will, has been really strange because we've seen Bitcoin reach all-time highs before the halving, which is the first time that's ever happened. Again, I don't really think the halving is that much of a driver of price action anymore, just because it's so de minimis relative to the circulating supply. I also think, there's some Bitcoiners that are in the camp of the halving drives these 4-year cycles. Again, we've got a small sample size of like 3 for these things, but there's a camp that says the halving drives these 4-year cycles. I'm kind of in the camp that it's also a combination of, like the liquidity cycles that just drive all assets. If you I love Michael Howell and cross-border capital. Guys like this have basically plotted out these kind of liquidity cycles that we've seen Bitcoin track really closely. So, the answer is probably it's a combination of a bit of everything. The halving definitely has played a big factor in the past. But in terms of what we've seen historically, we've historically seen Bitcoin rally after the halving, as you kind of have had that supply shock that's taken place on the market. And then also, I just think it's kind of a marketing thing for Bitcoin, right? Is all of a sudden people are like, oh, yeah, this thing still exists. People begin looking into it more and starting to dig into what is the halving. And, maybe people don't even understand that Bitcoin is, absolutely scarce. There's only 21 million Bitcoin that were ever be in circulation, et cetera. So I think there's a couple different kind of factors that drive that 4-year cycle that we've seen historically for Bitcoin. But the halving's definitely been a pretty big piece in there.
Mm-hmm. And on the store of value thing, because again, this was something that was really hard for me to wrap my head around, because you always think of, okay, gold, that store of value, and the hedge against inflation. And when you look at a chart of Bitcoin, it's sometimes, well, how is this storing value when it's this volatile? And it wasn't until I listened to a few podcasts and someone was like, well, gosh, if you just look at if you take that larger approach, back away from the day-to-day and look at like a 4-year time frame, oh, okay, now I can see it, type thing, where it does kind of store that value. But is the expectation that the volatility is going to decrease as the liquidity increases here? Is it going to trade more like a currency? And then if it does that kind of make it less exciting? Like, I mean, if it's just oh, well, if I can't be up 10% in a day, or in a few minutes sometimes, does that take the excitement away from it?
Sure. So I guess we could first start with the store value piece, and then get to the volatility. I think the way that I think of store value is kind of what you described, of looking at on the 4-year time frames of, how does this thing store value over a long enough period of time?
Mm-hmm.
Bitcoin's been the best performing asset in the history of mankind. It's outperformed everything over the last 10 and 15 years. Those first 5 years were really just a very early adoption. So you can make an argument to kind of cut those years out. But I think just structurally, what is Bitcoin? It's a provably scarce asset, while you have an increasing amount of money that's going to have to be produced to basically service the debt in the U.S. And so I don't really like this argument of for example, saying the dollar is a good store of value because it's $1. Well, there's more dollars being produced. So yeah, sure, you have $1 if that's your unit of account, right? But overall, those dollars are worth less. And when you plot it out against,
we just had the CPI report out today, right?
Exactly.
Yes. Was it today? Yeah, it was today. So yesterday.
Exactly.
Right,
and look, I think CPI is flawed. Like, forget CPI. Just look at assets, right? Just look at look at the S&P. Look at real estate. Look at even gold. Look at Bitcoin. Right. What in asset price terms, the things that you actually want to buy and allocate to generate wealth over time. If you're holding dollars, you're losing the amount of those things that you can acquire over time. So I would argue that the dollar is the absolute worst store of value. When you look at everything priced in Bitcoin terms over time, all of those things have come down. So for Bitcoiners over the last 5 or 10 years, everything has become cheaper in Bitcoin terms. So I think, Bitcoin has really kind of fundamentally made people question, what is a store of value? What are kind of the traits that makes a good store of value? There's definitely been currencies that have been way worse than the dollar. The dollar is obviously still the world reserve currency. It's the most clean shirt in the pile of dirty laundry of fiat currencies. But I would argue that Bitcoin is the best store of value and will probably continue to be, just based on the traits that it holds. And then especially when you're measuring it, in dollars. And then I also think, as it continues to devour other, monetary premiums, let's say, gold, real estate, et cetera, you plot out a chart of, BTC relative to gold. Well, you've been able to acquire an increasing amount of gold in Bitcoin terms over the last 5 or 10 years. I suspect that will continue to be the case. The second part of your question, going onto the volatility. Yeah, I think the volatility will come down, and that's just kind of the nature of an asset. As it matures, it becomes more liquid. And this kind of goes both ways. Yes, the returns will come down, but also I think Bitcoin counterintuitively is more de-risked at 70K than it was at 10K. And the reason is because the infrastructure is better. We've now got BlackRock, Fidelity, offering access to it, but also there's more liquidity. So, if some large sovereign wealth fund or, some large pension fund wants to get exposure, they're able to get in and out with less slippage than they would have at 10K. Bitcoin's still nowhere near as liquid as the treasury market, for example, but it's improving over time. And I think that will continue to drive more flows into the asset. And, some of these sovereign wealth funds will be able to say, okay, well, we can allocate more than 2 basis points. Now we can take 1% or 2% or 3%, whatever it is. And so I think, yes, over time, that volatility will come down. But I do suspect that Bitcoin, kind of trades similar to the S&P, where we get this slow grind up over time. And what's driving that? Again, yes, obviously part of indices coming up is just, over time, technological improvements, productivity goes up, GDP rises. But I think the even bigger driver of that has basically been the increase in money supply. Like if you look at the S&P or the NASDAQ measured against M2, it's actually like barely up from 2008. Where Bitcoin has been up a lot. Maybe you could argue for Bitcoin specifically, that's a bit unfair because that was like the origin of the asset. But the point about the S&P, they still stand. So